Hey everybody, and welcome back to the channel. Thanks so much for tuning in. This week I want to catch you up to date on what has happened in the GTA real estate market this summer. Take a look at some current active listings numbers, sales numbers, how are sales trending through the summertime. I'm going to compile that all together into months of inventory, looking at kind of the pace of the market. Is it a buyer's, seller's market? Is it balanced right now? What is going on? Then we'll wrap things up very quickly with median prices across 6 different GTA segments, being the Toronto freehold and condo market split up, and then we'll go through Durham, York, Peel, and Halton regions. Starting right now with active inventory. It's been a while since I've done a video, a few weeks, but you can see not much has really changed since the last video that I posted. We came into August with just over 24,000 active listings, and we are still sitting there at just over 24,000 active listings. We haven't quite gotten back up to that 25,000 active listing mark that we saw, but compared to last year, we had 16,000 just over active listings. So we're up about 50% in terms of active inventory from 2023 to 2024. In terms of single markets, the biggest driver would be the Toronto condo market, is seeing about a 2,500 active listing jump from last year to this year. Everything else is making up the difference, being the Toronto freehold market, this red line, and then Peel and York regions, as well as Durham and Halton region. You're seeing elevated levels of inventory right across the board. And that's being picked up on in the Treb Market Watch as well. You can see what a normal seasonal year looks like. Usually we'd expect to see inventory peak in May, June before falling off through August. We did see inventory creep up slightly from June to July. And based on what I'm seeing, I expect this to come down a little bit at the end of August. Maybe not a ton, maybe not as much as you'd expect to see in a normal market, but we'll just have to keep our eyes on terminations and expiries at the end of August into September, because that is the number that's going to be reported by the Toronto Regional Real Estate Board. Now, the pattern that we've seen from early July to right now, current week, being like the third week of August, I've highlighted that for 2023 and 2024. It is pretty similar, a bit of a buildup in inventory through July of last year before it plateaued, fell slightly into September, and then really took off. This year, the run-up in inventory started much sooner, and it was very steady really from the end of January all the way through to the beginning, middle of June. In July, we did see a bit of an uptick up to that 25,000 magic number before falling off into August, and then it's really plateaued since then. What a lot of people are banking on is a big jump in inventory like we saw last year. This blue arrow points to the Labor Day weekend. We saw a flood of inventory come to market, kind of peaking close to that 21,000 number at the end of October, beginning of November, before active inventory started to fall off again into January. While we may see a bit of an uptick, I'm just not convinced that we see as much of an uptick in active inventory as we saw last year, simply because the level that we're at this year is so much higher than what we saw at around the same time in 2023. Only so many people are going to be listing their homes in any given year. If we see a big jump in active listings, I think that speaks to some serious stress in the market, especially if we see sales activity start to tick up at the same time, meaning, sellers are having to really come to terms with what buyers can afford or are willing to pay for their properties. Now, speaking of sales and the rate of sales, here's a kind of a similar exercise to what we just did with active inventory. You can see that we're down about 11% from last August at around the same time to right now. We followed a similar trend through the beginning of July, saw a little bit of an uptick for 1 week, which we saw right here in 2024 before falling off again. I'm expecting seasonality to play a big part again in our fall market, and I'm not expecting a big uptick in sales through September, maybe a slight leveling off before falling back off through into the end of the year. And that's based on the fact that really we've been following seasonality just at a much lower level throughout 2024 to date. You can see sales peaked back in April according to MarketWatch data, and slight drop off in May before a more defined drop off into June and July. And then based on my projections, here's what we're looking at for August. So again, it's going to be slightly slower than what we saw in July, maybe a bit of a leveling off in terms of this slowdown, but still it'll be the second slowest sales month of the year is what we're projecting so far. So active listings being relatively flat for the last few weeks, sales continuing to fall off. You know what that means for months of inventory. It has continued to climb as we've seen kind of all year. The climb was really enhanced through July when we did see a lot of listings, but a big drop off in sales. One bounce back week over the long weekend where, you just got some data fuzz. You saw the exact same thing happen last year going through the August long weekend, a bit of a dip before months of inventory continued to climb. I think a months of inventory climb is going to be a lot more driven by a falling off in sales this year as opposed to a buildup in inventory that we saw last year. But just how high can months of inventory really go prior to the end of the year? If we look back historically, you can see that it was in 2008, December of 2008, that months of inventory peaked out at 8.53 across the Greater Toronto area. And what I've done is I've gone from April 2024 through to August 2024, comparing that to April 2008 through to August 2008. We started off at 2.99 months of inventory in April 08, got to 4.23 by August. And the jump has been more pronounced this year in 2024, starting off at 2.55 months of inventory, now up to a projected 4.74 months of inventory. And as we know, sales activity does tend to drop off. Even if active inventory stays plateaued or elevated, it wouldn't really surprise me to see GTA months of inventory start to creep into that 6-7 range by the end of the year. Here's what 2024 looks like so far, a bit of an update compared to what we'd expect to see. You can see the highest months of inventory month on average in a given year is January, and going back to 2008, the median and the average months of inventory falls well short of 3. It's about 2.75, let's call it. This year, we saw the market start off a little tighter in January and February based on this metric. Before March, April, May, June, July, we really started to see that months of inventory skyrocket. Again, my projections have things starting to maybe level off a little bit in August, but you can see we're going to be fighting against seasonality where you'd expect months of inventory to climb into September. And this September, we do have a rate announcement coming up, which, does that affect buyer sentiment, buyer activity? Will more sales start to happen? Or will sellers get more excited, as we've seen with the last couple rate cuts, assuming that it does happen, and we see a bigger flood of inventory, which really drives months of inventory higher for the rest of the year? Let me know in the comments below what you think is more likely to happen. That's kind of our wrap on active inventory, sales activity, months of inventory. Let's take a look at what is happening with prices, a quick snapshot at each of the markets right now. Usually this chart comes with sales activity, but I've eliminated sales totals. They are falling off, as I've already highlighted right across the board on previous slides. This is what median sale prices, at least the 4-week weighted moving average, looks like. You can see things peaked in June in the Toronto freehold market, and they've now since fallen to about levels that we were seeing back in February. On to Toronto condos, and you can see that it's been a bit more of a gradual fall off from the peak that we saw in mid-April to where we are right now. But again, median sale prices are back about in line with what we saw in the February market. In Durham region, a bit more of a big fall off from early June into July with a kind of a slight recovery, but again, I wouldn't say that this is much of a trend. Prices right now in Durham region are roughly in line with what we saw in late February, early March. After a gangbuster start to the year that we did see in York region, which I touched on in previous videos, prices really plateaued for most of the year in York region. We've seen a bit of a fall off since end of June to right now, but again, prices, just like everywhere else, back in that kind of mid-February range. Looking at Peel region, a little bit shorter of a plateau than what we saw in York region, the fall off from the peak in mid-May to right now, and our prices, again, right in line with what we're seeing back in February. Wrap things up with Halton region, all property types, median sale price, and again, peaked back in May at around the same time everywhere else, dropped off to where we are at right now in August, which is again, right back in line with roughly where we were in February. So if I had to sum the market up in a few words for what we've seen through this past summer, it was a little bit of seller excitement in late spring, early summer. That first rate cut, they thought buyers would be back out. They flooded the market with inventory. Buyers did not come back out. In fact, sales activity continued to slow. We saw a bit less of a jump in inventory even after the July rate cut. And again, that buyer activity continued to fall off through the summer. Same thing has happened in August. We're just going to have to see what happens with the rate announcement in September. Again, it's looking likely that there will be a cut. Will that make a big difference in affordability? I don't think so. Will it make a big difference in buyer activity? I don't think so, but I could be wrong. Once again, let me know what you think in the comments below. That's all I've got time for this week. Thank you so much for tuning back in. If you enjoyed the video and enjoyed the dive into some stats and some numbers, please don't hesitate to like the video and subscribe to the channel so I can reach more people just like you going forward. Until we speak again next time, please stay safe and cheers.